Thanks for joining us today, guys. We are on episode number 3 with Colin Dambrauskas and guests within the basically industry experts within the real estate and financial space. Today we have with us David Davies from Sunlife Financial. He's a financial advisor. Thanks for joining us today, David.
Thanks for having me.
Absolutely. So David does, I guess not a whole lot of people really understand truly. Perhaps they do, or perhaps they don't. I feel like most clientele don't really understand exactly what a full financial advisor does. So David, you do investments with anything to do with just general investments across the boards, RSPs, bonds, etc. But you also do life insurance, cash flow saving, budgeting, etc. I used you for essentially one of each of the above. So I wanted to bring David in today just to kind of talk about how the financial space has changed drastically since COVID-19. And obviously we've had a lot of financial turbulence. So let's get right into it. RSPs, because that's the biggest thing that affects me directly and my clients, because first-time buyers set aside cash, they've got that money aside to buy the house. RSPs have obviously, investments in general has kind of tanked. Let's chat about, I'd love to hear your thoughts about, where RSPs are going, kind of what people are doing, thoughts, and, what's in the investment world, David?
Yeah, so the big thing is the markets have taken a huge hit, which has impacted a lot of RSP values that are invested in the market, right? So if you have an RSP that has stocks inside of it or has mutual funds or ETFs inside of it, they've taken a big hit. So we're looking at what's happening with that. What's the impact to clients? So, I mean, I'm having two different types of conversations. There's people that are very worried and stressed out because they're relying on this money, or they're going to be relying on this money. And then I have other investors that look at this as an opportunity, knowing that they have a long time horizon. They're able to put more money into it because this is an opportunity to buy low.
Yeah, no, and that just makes sense. And that's actually a lot of the questions I'm even having on the real estate side is this, and I hate to say it's like an opportunity because it's honestly not. And I had the same conversation with Nick Davies, the real estate, your brother, in fact. We were talking about the real estate, how a lot of people are seeing this as a potential opportunity. And I hate to even categorize it as an opportunity, but do you see from an investment standpoint that perhaps, some people need to be considering that, yes, as across the board, investments are down, but at the same time, maybe this is the right time to buy instead of, I want to say, stressing that they need to just cash out, because obviously it's a bad time to cash out, right?
Yeah. So the general advice that's happening right now is stay the course. So make sure that whatever plans you have set up, financial plans that you have set up, continue doing those plans and stay the course. Don't allow this to derail you. If you are someone who's pulling out money every month because you're relying on this money in your investments, then I would look at options of reducing how much you need. One of the positive things is, yes, this has taken an impact, but a lot of people aren't spending as much money as they normally spend. We've seen a huge decrease in discretionary spending because people are locked at home. So that's a benefit to this. A lot of people don't require the same amount of income they need.
Yeah, and that's, I suppose it is somewhat in relation to, there's obviously income loss and job loss. And I suppose with everybody being isolated at home, you'd expect spending to come down. So I guess that's pretty solid. How do you see, and I suppose I have a lot of questions come my way in terms of, that first time buyer, to kind of swing back to that is, I've been putting money into my investments in RSPs because I wanted to buy in the near future. Now it's like, oh shit, I'm set back months, maybe like beyond a year. Do you see a very slow progression back to where things kind of were? Do you see it taking a long time? Is there going to be a rebound in the near future? What's your senses on projections to kind of get back to where you were in terms of a financial volatility standpoint?
Speaking without a crystal ball,
I want to see that crystal ball. What do you got? Shake it.
Based off of what I've been researching, the different portfolio managers that I follow and analysts and economists that we follow, basically what they're saying is this is going to come in two waves. Now, obviously, they don't know for sure, but the first wave has already hit us, and now we've seen a positive correction since we were hit originally. Markets were down to 35 to 40% in some cases, and now the indexes are only down about 15 to 18%, depending on when you're watching it. So we've seen a massive recovery already, but there's a lot of speculation that this will hit again. If government is trying to open up businesses and borders prematurely without a vaccine or a cure, we could see people getting affected again, and that would cause even more fear. So that's a speculation that's happening right now. But the key is, if you look at history, everything comes back. Like one of the biggest drops of all time was in 1987 on Black Monday. The markets dropped 23% in one day, and people were just losing their mind. And it took about 18 months until it came back to where it was. In fact, if you still had your money invested in that time to now, you would be up 2,000%. So if you had 100 grand, you'd actually have 2 million. The long-term markets always rise historically. When this thing will come back or not, I'm optimistically hoping by this fall, but we don't know.
Yeah. So ideally, it's obviously a terrible time to panic and sell. And if you're in a comfortable enough position to look out and reach out to somebody like yourself and say, hey, perhaps I have some opportunity to buy some stock when it's at perhaps a lower value, and, try and come out ahead in the long run. Because investments, that's all it always is, right?
Yeah.
I don't care if it's real estate or stocks or whatever the case is. It should generally always be a long-term plan. If anybody's looking at doing those short-term gains, it's usually where there's losses.
No, absolutely. And yeah, you got to look at the long term, the big picture for this stuff. And keep in mind that investments, it's only a loss if you pull out money. It's really an arbitrary number that you see on the market values because they're fluctuating every day. You got to look at the bigger picture, like you mentioned. But it's interesting because people don't do that. I'm going to share with you, Colin, a little picture, and I want you to look at it. These are the market fluctuations, but I want to skip over here to one of the last photos that I have. And I show this with clients because people say, okay, I understand, buy low, sell high. But the issue is people mess this up. So this is a graph. I don't know if you can see this on your end.
Yep.
This is showing the best trading days and the worst trading days in the Canadian market, the S&P TSX composite. So if you notice here, the worst trading days that we've seen over the last 30 years, the best days have followed right after, within 60 days after it. So the problem is people, they panic and they pull their money out and they miss on these big days, these big trading days. And these days matter so much that if you had 100,000, Colin, so if you had 100,000 of your own money over 30 years right now, and you just had it invested into this S&P 500, the US index, you'd have over $2 million. But if you missed 100 of the best days, only 100 days out of 30 years, you'd be down 43. You'd have 43,000 from your 100. You'd lose money.
So when you say missing out on the 100 best days, you mean to say days to purchase?
Meaning days in the market, days invested in the markets. So here's the thing. If let's say there's 365 days, on day 100, the markets crash. On day 101, you pull out.
Right.
Well, day 150 is a great day. You just missed out on day 150 because you've pulled out.
Gotcha.
So the issue is people pull out because they get nervous and then they miss out on these best days, which usually happen very closely after a bad day. So like I'm not showing rocket science here. So it's funny, and people are like, okay, I understand that, David, but when it comes, we won't do that. Well, if I show you, this is where self-directed accounts are getting slaughtered right now. So if you look on Quest Trade advertisements, start your own self-directed account, invest, lower fees, you don't have to pay an advisor. All
Yeah.
great stuff. But the problem is this is the investment industry in sales and billions of dollars. This is the industry in Canada.
This is emotions.
Yeah, like you can see every time the market's at a high here, this is the market, we buy more. Every time the markets are doing really well and the price is high, people are buying more. And look at that, when it drops, this was the last recession in 2008, when the markets dropped, look how many people were selling. We had a decrease in sales. We actually had a net loss, and there was people selling off so much that it was a decrease.
Well, look at 2018. 2018, like, I mean, you got a healthy growth for years, and you have people buying.
One sign of bad.
Almost
You're right.
At its peak.
Yeah, 2018, we saw a 20% drop in October, and everyone panicked and people sold off. But it was funny because it was such positive growth. So the issue is they're emotional, and they need to have somebody they're talking to. They need to have someone just to bounce ideas off of. Even if you know this stuff practically, in theory, in practicality, it's a lot harder to execute because we're our worst enemy. You can always give somebody great advice, but it's hard to take your own advice sometimes.
Oh, absolutely. And the thing that I notice a lot with clients is I feel like we're a very educated society now, especially with the amount of data that's, you have a personal computer in your pocket at all times for the most part, right? And the amount of information that you can find on your own is quite high. But here's the thing, there's a lot of information to filter through, and there's a lot of it that you need to try and grasp and understand exactly when it applies to you, when it applies to your market, when it applies to the current conditions. You might find something that you read and took to heart that was written, I don't know, a year and a half ago, 2 years ago, when markets were a little bit different, and the reaction to that could be vastly different from today. So it blows my mind the amount of people that don't reach out to experts and truly sit down with somebody, again, like yourself, who do this from the moment that you wake up in the morning. And I know this for a fact because it happened last night, but until the moment that you're about to close your eyes, we're still sometimes talking about this stuff. So you are living and breathing it. It's what you do. I say just don't take it for granted and reach out, at the very least, for a consultation, and kind of go from there. So I have a lot of first-time buyers. I have a lot of clients who come through. I have to offer mortgage protection insurance, which we both know I am not a fan of mortgage protection insurance. Anybody watching this who believes they may have signed up for it unknowingly because it's pushed by banks, it's pushed by lenders, it's pushed by brokers, we get a cut to sell that. That insurance policy doesn't cover you fully. Don't like it. I always instruct my clients to go and talk to a financial advisor and get full coverage. But a lot of them, when I talk to them, it's that, I guess the main comment I get back, I'd say 90% of the time is, I'm 25, I'm 26, I'm 30, I got one little guy at home. He's 6 months old. He's 1 year old. It's not a pressing need for me right now. I'll consider it, but I'll get back. I'll circle around to it maybe down the road. And they never end up doing it. They have their coverage through work, which is usually like a year's salary that they get coverage. And I think it's so important for them to come and sit down with you and talk about life insurance, because to your point, it's not going to be any cheaper, and it's cheapest now. And set yourself up now, because who knows what the future holds for you, right?
Yeah, exactly. Number one, it is going to cost you more money down the road. You're going to pay more for it, so it's actually going to negatively affect you. And then secondly, you don't know if you can even obtain it later down the road. Many people will have illnesses or medical diagnoses that happen throughout their life. It's super common. And that it hinders your ability to obtain insurance. So insurance companies only want to insure healthy people. It's a business transaction, right? So because you
Absolutely.
don't know, it's always better to do it early. And and if you died and you have a mortgage, for example, like if it's a case scenario where you own a mortgage, well, you got to think, if I can't pay for this house, what are the financial repercussions to the people around me? And just ask yourself that question and walk through. And that's what we do with clients. We just have a conversation. And if there's a legitimate need there, then we show them the solution, because that's a big problem. That's a huge problem.
Yeah, absolutely. And we've had this discussion before in terms of life insurance for children, and I've talked to it with my friends, and I've had different um, responses to what we set up for our 4-year old when he was only about 1 year old when we approached you and we talked about it. And I'll be honest as well, when you told me, like, set Tristan up now for life insurance, pay into it, into his until he's about an adult, it'll be paid for life. I thought, well, I don't know, that kind of seems, maybe not the greatest plan. I don't really see the value. But then you walked us through and you explained it, and then Trang, my wife, she also did the same thing when her parents set her up as well. She's now protected as of, I think she was, early 20s. She's got full protection for the rest of her life. She doesn't pay into it as an adult. My child now, we are going to pay into it for his entire infancy and into his teens. And when he's an adult, he's got full coverage as well. And should anything happen, that's just one less thing he's got to worry about. And I'm setting him up for success, I guess, as an adult. And
Yeah, you're giving them a good gift if you're doing it for your children, because a lot of these policies, they'll accumulate a cash value that the child can use down the road. It's an asset that is accessible while your child's alive, and that's a free gift you're giving them, especially if it's paid up. We also have plans like if your kid were to pass away prematurely or unfortunately have a catastrophic illness. What do you think happens to the family income? Do you think people are working harder now that knowing that their kid is sick or their kid passed away? Usually not. Usually we see a big problem in the household finances after a loved one passes at that close. And so that causes a big strain on families. And so you can have a policy that gives you that protection, but then like you said, as a gift later down the road, they have this policy that has money in it that they can use, and they don't have to worry about purchasing insurance at a higher price. So it really is a great gift, and it covers the problem.
yeah, it's not just, putting money aside. It's kind of useless down the road if anything else. And
Yeah, it will be
obviously,
used. The money will be used. It's going to something.
absolutely. And obviously, I can speak from experience with my younger brother, as you well know. He has two beautiful young daughters, and one of which at the age of 5. And keep in mind, like, this was a 5-year-old girl who had no pre-existing conditions that she knew of, and neither did the parents. Nothing that would point to any signs of problems down the road. And um, she was diagnosed with 2 forms of rare leukemia, and the strain that's put on not just the child's life now for the rest of her childhood, which is just terrible in of itself, but my brother as well, taking so much time with travel, missing work, and having to take time off. Like, it was so detrimental to his life.
Yeah.
And do you really think at his age, like, he would have been in his late 20s at the time? Do you really think that in his late 20s with a young 4 or 5-year-old daughter at that time, that he's thinking, I should probably consider life insurance? Probably not. And that's the message I want to get across to people.
Yeah. Yeah, and it goes back. It's the same conversation, Colin, with the RSP and the investing. People, when they're advising themselves and they don't have a financial person to walk through financial conversations with, they don't ask themselves these questions, because we don't want to imagine a reality that looks like that. But the problem is that is a lot of people's realities. We paid out on a 4-year-old, one of our clients, with a benign brain tumor. And it sounds good because it was benign, but it was so big that it pushed on other parts of the brain, which causes long-term dysfunction in movement and motor skills. And it's not a pretty situation. So that policy was in force for 2 years and it paid out. And they were very thankful to have that money so they can focus on recovery with their family.
Yeah, absolutely. And I suppose it's not something anybody wants to think about either, right? It's one of those, never, it's not going to happen to me. And if it does, I'll kind of deal with it. But I was in that same mindset years and years ago. And I'm now, as I mature and I have my own family and I see my, brother and, his family go through things, it's just like,
Yeah.
it's not going to fix the problem. But boy, oh boy, I tell you right now, if he was properly covered, what he had to deal with would have been slashed in half minimum, because at least he doesn't have to focus on the financial burden and everything else that came with it. It's something to consider. It's not for everybody, truly, but honestly, to sit down with you and talk about the options and the possibilities that could come out of it, I think it's a no-brainer. If it's not for you at the end of the day, so be it. But at least sit down and have the conversation with somebody else we're talking about.
Yeah, that's all it is, man. Is a conversation. You got it.
Awesome. Well, David, I don't want to take up too much more time, so I think we can kind of wrap things up from there. I think what I've noticed from you, anyways, because the videos were around COVID-19, obviously you are an individual who, like myself, likes to sit down with clients face to face. Obviously, you're doing a ton of Zoom calls, phone calls, emails, so you're fully available, 100% operational in that respect, digitally. So I'll link David's information as well. Highly recommend that if you're not working with a dedicated financial advisor, you don't have anything more than life insurance through your work or you're unsure, just reach out and ask. If any time right now, now's the time. You should have more time on your hand. I think I said time like 6 times. There's most people say that, we'll get down and we'll get to it. Life gets in the way. Well, you know what? Life got in the way, and now you're forced at home. Take a look at your coverage and give David a call. Chat about your options and see where it takes you.
Happy to help.
All right, guys, well, that's it for today. We will have, I think I got another 3 or 4 episodes coming up as well. Some fantastic content. And thanks again for David's undivided attention and expertise.
Thanks a lot, Colin. Thanks for having me. And you're doing a wonderful thing, man. You're getting there's a lot of information in this world, and you're grabbing credible sources and helping your clients with other industries. You're going really above and beyond. So keep doing what you're doing.
I appreciate it, David. And hopefully we can all try and take care of somebody in some respect. Well, guys, have a good day. Thanks again. And we'll have episode 4 filmed soon. Cheers.